Very good morning and and hello to everyone listening. It's our first, chat and outlook for the new year. Anyone who thought that 2020 would give way to a calm 2021 is perhaps mistaken. I think what's interesting from our point of view, from the point of view of Rosecut, is that 2020, despite all the volatility in the world, it was actually quite a good year in terms of our portfolio. So Dan, I might just pass over to you to take up just an overview of the performance.
Thanks, Mike. I'm sure the regular listeners of this podcast or video series will remember a number of the tactical asset allocation calls we made last year, and that managed to add significant value to portfolio performance. So the sterling portfolios, from the lower risk to the higher risk ones, they all made between 5 and 6% last year, which, given what went on, turned out to be quite a good return, I would suggest. In terms of the year ahead, I think that we've never really seen such agreement among the consensus as to what's occurring. So we have what you could describe as a bit of a global reflation trade. So we're seeing energy stocks, value stocks, basically the stuff we were adding in November doing very well. And the only real sort of risk in the immediate term appears to be related to the potential for more lockdowns in the US, where of course the Biden administration will take office shortly, and with a Senate that should be supportive of him. What observations have you drawn from that, Mike?
So I think, first of all, in terms of markets, people tend to focus a lot on equities, but in the bond market we've had some interesting moves that yields are rising. And that tells us, I think, that the markets were expecting more growth, maybe a bit more inflation into next year. And again, that tends to favor energy financials, which we've been adding. On the Biden administration, it would be a very, very different administration in terms of the style of government. You couldn't possibly get more different from the Trump administration. It would be an administration of experts. I think, generally speaking, all the people who've been added to the cabinet are very experienced and first class. Many of them worked in the Obama administration with President Biden. So we can expect an administration that's more technocratic, which I think may mean that they take a tougher line on things like the wearing of masks, the possibility of sort of a federal level imposed lockdown, even though that would be quite difficult to impose at a state level. I think people will take COVID and the vaccine program more seriously. Economically, the really big thing would be a fiscal stimulus, another fiscal stimulus. So we've kind of had 2.5 programs already. We had the first shot from the Fed, then we had a fiscal stimulus, and we've had another package recently. And the Biden administration promised to do even more. And I think that again should help value stocks. And I think at least until we get to, say, maybe March or April, the market will be in this kind of maybe melt up pro-growth type of mood. Until then, we kind of get a sense of where are we with COVID and the extent to which growth and activity have come back.
Yeah, so I think one of the risks that we've discussed in our investment committee meetings is the risk that the reflation trade gets so carried away that bond yields rise to a point where equities start to suffer, somewhat similar to 2018. I think we've probably got a bit of room to go there, but and probably a few months as well, frankly. But as you say, from the end of the first quarter, those risks could be mounting.
Yeah, I think so. And I think the people listening to this, the barometers you should watch, I think obviously the US 10-year yield, the dollar, and also whether the big tech stocks stop performing, because they are, in terms of their valuation, they're quite sensitive to rising bond yields. And I expect that we'll see a sort of a transfer of money to more cyclical sectors that are sensitive to the economy, away from some of the big tech players.
Yeah, and that's good news for UK equity investors, because the index is really weighted.
The real
towards
value play, isn't it? Yeah.
Yes, absolutely.
Exactly. Yeah.
I mean, going back to technology for a second, one of the things that is in the news at present, and I suspect will continue to be throughout this year, is Bitcoin.
Yeah.
What are your thoughts on Bitcoin, Mike?
So I've actually had lots of people ask me, should I be buying Bitcoin? It's been incredibly volatile in the last couple of days, trades over the weekend. And so it's lost, I think in the last 70 hours, maybe 20-something%, it bounced back. So I tend to view it really as a speculative asset. I don't think it's succeeded in being a store of value or as an independent currency. And people who trade it regard it as a kind of a barometer risk appetite as a speculative asset. I think that the whole Bitcoin ecosystem will continue to grow. More institutions will allow people to trade it, and that would probably be supportive in the medium term. In the long term, I think central banks have an interest in it not succeeding as a currency or as a means of exchange. So that will obviously limit it. So I'd be very, very wary. I mean, treat Bitcoin as you would treat a very, very risky stock, and just consider the volatility. And if you hold it, you have to, I think, just trade it a bit as well. But so it's really, I place it in the corner of kind of high risk, high volatility assets.
Yeah, I suspect that's probably why I find it so fascinating, because I'm drawn to anything with volatility.
Exactly. Yeah.
So, Mike, thank you for that. I think that's a good sort of
thanks, Dan.
Of what we've seen. Look forward to speaking to everyone next month.
Okay. Good luck. Thanks.